200 points, but about 150 off the day's lowest level. Manish Gunwani is with us. He's head of equities, Bandhan Asset Management Company. Manish, great to have you with us here. Good morning. Thanks for your time. The big overweight for most has been large cap financials, and the one which is has been discussed and talked about the most is HDFC Bank. But these numbers kind of show pains of the merger, etc., coming to the fore. What do you make of it from an institutional money management point of view? Large name, large weight, everyone has got exposure. Many want to increase exposure, but do these results deter?
So actually, I think that private banks are still not a great risk reward, both from a cycle perspective and from a structural perspective. From a cycle perspective, when credit cost is low, almost every bank seems to have the same ROE and growth. I still think there is a valuation gap between the low price to book financials and high price to book, which will converge. From a structural perspective, I think we're probably seeing some signs of change in customer behavior where CASA seems to be a big issue right now. And a lot of the high price to book private banks, the business model centered around having granular deposit franchise and with the assumption that CASA would grow. But because of technology and because of maybe financial literacy, if CASA is becoming an issue, then I think there is a threat that these high multiples may not sustain, because obviously if CASA doesn't grow very fast, then the spreads could be under a lot of pressure. So I think the jury is still out on that. We don't know if this CASA pressure is because it's just an interest rate cycle where deposits are moving to term deposits, but the CASA growth is definitely lower than in previous cycles. So I think we need to be careful about being overweight on private banks at this point of time.
Okay, be careful on being overweight on private banks at this point. Got it. But in the market, I just wanted to point out that there are plenty of stocks that are seeing buying interest now. ICICI Lombard is now up 5% post its numbers. So that's picking up quite a bit. Angel One is coming back into action, so up 3% there. Irida is up almost 2.5%. Polycab, we were speaking about how that stock is now up 10% almost from the lows that it hit in the last fortnight. And then a couple of others as well. Anand Rathi is up almost 1.5%. So these are stocks that are coming back partially, but coming back nevertheless. Manish, hi, good morning. What do you do in the market overall now? There is this wave of caution as we head into some big events, where there's the vote on account, there's the election, then the budget, full budget in July. Do you think that this could be a tricky year for equities? And if yes, what's the best way to approach it now?
So yes, I mean, obviously both from COVID bottom and specifically last year where the broader market had a spectacular run, the base is a bit of a challenge. I think the big return globally in equities can only be made in 2024 if the Western central bank, specifically the Fed, is more dovish than what general expectation is. And there are some good reasons for that. I think given US debt levels, election year, China, etc., not buying US bonds, there is fair bit of an argument to make that US policymakers will try to be dovish and ensure that the nominal GDP of US doesn't go down. But we still have to walk that talk. So I think the liquidity from a global perspective will hinge a lot around how Fed delivers real rates. There is, as I said, a good chance that real rates may be kept low in US, which will be good for equities, but we'll see how it goes. But otherwise, from an India perspective, I think given our current account dynamics, given our geopolitical positioning, given the growth rate relative to other EMs, I think this has been talked about a lot. Obviously, we are in a good place. So we should see a fair amount of liquidity globally. And in India also, I think the domestic side, on the fixed income post-tax, I think the rates are quite low what investors are making, which is pushing people into real estate and equities. I think those things continue.
Hi, Manish. Good morning and good to see you in. IT stocks, they delivered more or less inline set of numbers. Some commentary excited the street. And we had a big rally in the last 5 sessions. What's your view post this rally? I mean, have they run a little bit ahead of themselves? Or do you see a fair bit of safety out there and things will improve from here on? So you rather buy into it?
So I think IT is a bit of a tactical trade. I think that as long as you see visibility of a soft landing happening in US, clearly there'll be interest in that sector. So yeah, 2024, IT may be a dark horse this year. Structurally, I'm not that positive because the size of the sector is big. I think the currency tailwind, which has driven the sector for last 20, 25 years, may be a bit of a hindrance going forward. And also, I think that a lot of the unlisted companies, the global captives, as we call them, they are also attracting a lot of talent. So there'll be pressure on wages versus the margins because of currency, I think. In the sense that I think if rupee were to be strong for next 2-3 years, which is a fairly likely outcome, I think, then clearly there will be some margin pressure as well. So again, this is a large sector, so obviously stock picking helps. So I'm not getting into, someone can pick a great stock and still make big money. But it's not the kind of sector, I think, which will, as a sector itself, where the market cap will go up too much.
Okay, all right. Any spaces that you like that you think, could see some traction despite the volatility in the market? Some of these new spaces, whether it's renewable energy, whether it's defense. I mean, defense is not new. A lot of these stocks have played out already. But the focus area of the government has been on these spaces, electric vehicles, etc. Do you see further traction in any of these spaces?
So I think some of the themes which we talked about earlier continue to have momentum. The power capex theme, the real estate theme. I think one new segment which is still worth risk reward, although obviously there's no great clarity, is to rather than look at sectors like defense, roads, railways, which benefited from the reform of the last phase, maybe next phase. Some of the oil and gas companies, some of the divestment plays, I think they are still quite attractive. So some of these PSUs where your asset base or where, efficient private management can add a lot of value, if you take a calculated optional value that if it gets divested, what would be its fair market price? And if that looks very attractive versus today's price, I think those are the kind of bets you can take, maybe in small weights, but that is, I think, a good segment for optional upside.
All right, Manish, thanks a lot for joining in and for giving us a view on the markets. We look forward to having a chat with you in the coming weeks as well.